oil prices remain steady as markets await new developments in the Middle East conflict. Last week, US and British strikes against the Iran-backed Houthi group raised concerns over a broader conflict in the region. Coupled with the Israel-Hamas war, this threatened to disrupt oil supply. However, there has been no tangible disruption to global oil supplies so far. Attention now turns to potential retaliation by the Houthis. Despite the conflict, oil prices have had a weak start to 2024, falling over 10% in the past year. Global crude demand is expected to see little improvement due to high interest rates, cooling economic growth, and sticky inflation. In addition to the Middle East conflict, markets are eagerly awaiting key economic readings from the US and China this week. China's central bank is expected to cut medium-term lending rates as it tries to support a slowing economic recovery. Chinese fourth-quarter gross domestic product data due on Wednesday will provide insight into the country's economic performance in 2024. Fuel demand in China has shown signs of improvement, but uncertainties remain due to high inventories and weakness in the country's major economic engines. In the US, attention is on addresses from Federal Reserve officials for clues on when the central bank plans to cut interest rates. Retail sales data will also offer insights into inflation. Sticky inflation may delay the Fed's plans to cut interest rates, which has strengthened the dollar and weighed on oil prices. Overall, oil prices are in a holding pattern as markets await further developments in the Middle East and key economic data from the US and China.